Good morning, traders, and happy Friday. It is 8 a.m. Chicago time on the 18th of February, 2022. Thanks for joining us today on episode number 2175. We're almost at 2,200 episodes, getting pretty close here. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. A quick reminder that I was invited to a panel on the Money Show in Vegas. If you happen to be in Vegas, you might want to swing by. My schedule's a little bit packed, but I'm ambitious in that I want to meet folks person to person if possible. But I will be speaking on Saturday at, I believe, 2:45 p.m. along with Anthony Crudeli and Jared Tendler. And if you're in the area, just swing on by and participate in the panel discussion and say hello. Again, derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So, as Vernon Hodge here says, if the image seems low quality to you, I'm broadcasting in 1080p at a bit rate of about 5,600 kilobits per second, which should be really high quality. If the image is fuzzy to you on YouTube, you can hit the settings button and switch the display to 1080p HD to get the highest quality. On Twitter Media, if you're watching there, it is limited to 720p, so there's not much we can do about that. Today, we have a mixed market posture. We actually opened and pushed above 4,400 and got to 44.11, and then we came back off. The market is really responding mostly to this Ukraine Russia crisis, and it is not going away. In fact, the latest headline that came across almost an hour ago was, and I posted it on Twitter, was that a separatist leader in eastern Ukraine, which is sympathetic to Russia, announces the evacuation of residents to Russia. So this is an indication of a breakout of more violence. There has been shelling in the region, and there's a local conflict. So on the headlines, an economic events section of the pre-market summary sheet by Convergent Trading, we listed Ukraine civil conflict in the Donbass region. Everybody's keeping a close eye on this. This is starting to look like a proxy war supported by Russia to interfere with Ukraine and potentially set up the annexation of those regions into the Russian Federation. So that's what the market's responding to. Crude oil getting hit again, 2% down. Crude has fallen below the $90 mark. We talked about this earlier in the week, that as the Iran situation gets better, as the conflict in the Ukraine starts to look positive, that Russia is not going to be in direct conflict with Europe or the United States, that crude is likely to fall off because the rally is responding to sanctions, and sanctions are being lifted on Iran as part of the deal. We're likely to see more crude supply. Demand remains the same, and so we're expecting the price of crude to naturally fall, and we're seeing that take place. I think crude is about $7 off, something like that, from its highs. Today, we did get some minor numbers. Really, Great Britain retail sales, it's listed as high tier, but it's not really a mover. Retail sales came in stronger than expected at 1.9 versus 1%. A bunch of numbers: inflation rate out of France in line, construction output out of the Eurozone. But really, we're looking for consumer confidence out of the EU. This is the flash number. expecting -8. Existing home sales is the high tier number today. Existing home sales at 10 o'clock, expecting 6.1 million units. And then we get Feds Evans, Feds Waller, Feds Williams, Feds Brainerd into the afternoon. So it's the Fed parade, and any of those could really impact things, especially the voting members. Brainerd being the vice chair. And so we would want to pay attention to what they say. It is Friday. We're coming into the weekend. People are exhausted. And so the trade might be slow. But the other piece that was actually brought up by one of the head traders at Convergent Trading, and someone I recommend you follow, at Tendex Capital, at Tendex, Tendex Capital. Strongly suggest you follow on Twitter. He brought up the fact that it is monthly options expiration today, and he says there's a fairly substantial 2.2 trillion in expiring issues, which may contribute to volatility, particularly towards the close of the session today. So keep that in mind. I actually overlooked. I need to set a reminder to look at OPEX on expiration on the third Friday of every month and see what the volume is likely to be. In terms of the ES, we have elevated volume, 270,000 contracts so far with 52 points of range. Both of those numbers showing up blue, telling us that they are exceeding what we would expect as the mode or the most common value. At 52 points, the ES has substantially high range. And the volume is definitely elevated. 56% of the inventory is long, meaning 56% of the volume traded above yesterday's settlement. The point of control is at 43.97. It was at, it's 43.97, right around the century figure. I'm looking for that to be just a noisy area, a lot of resistance up there. So at the 43.95 to 44.05, that region is expected to be quite turbulent. So if you're trading and it's coming into that area, you'll want to use wide stops or just stay the heck away, as that's likely to be a noisy region. Okay, well, let's take a look at what the markets did yesterday in our review segment. As we shift up here on this 1 tick by 8 chart, we're looking at a market that basically traded sideways on the open, attempted to push higher into 41.75. Let me get rid of these as they have reset. Attempted to push into 41.75. We basically opened on top of Wednesday's point of control. We tried to push higher into Wednesday's range and could not. We stopped at the kilo volume node at 44.41 and rolled over. So we tagged the overnight point of control and we rolled over and took out the prior day's low at 44.22. And then that gave us the push into what was it, Tuesdays or Mondays? I think Monday's range, the pre-gap range. And in that situation, we're looking for 44.09 and 43.97. 43.97, a naked point of control. There it is. It got tagged. So overall, like I talked about yesterday, this was scenario 2. I talked about just selling the pushes up. That's what yesterday was. Just sell the pushes up. Did not really look for longs. Just sell the pullbacks. And there were several opportunities to do that. This week, I really haven't traded much. This week as I've been out of alignment with the market and generally just very, very tired as I'm not sleeping at night. Our newborn daughter, she's now 9 weeks, and man, she just does not sleep. So I'm really tired, and the performance, my performance is reflective of my mental state. Yesterday we had a very minor distribution at the top. I would ignore that. Then we had this big box right up here that formed right up here, which was very, very choppy. And then we broke down, and we formed this secondary box right in here. And what we're doing is we're actually stuck in this secondary box. We're opening in this secondary box. There's an important low volume node here at 43.68, which is highlighted by a stock zone. You can see that stock zone down there. So if you look at yesterday, I mean, the stock zones were dead on. It moved from stock zone to stock zone to stock zone. And overall, we're opening, believe it or not, in balance against yesterday's late afternoon auction. So we actually closed by shifting the point of control from way up here to right there, right in the last minute. There was a lot of volume that went off on the close, and it finished pretty weak. It was a trend day down basically yesterday, and we could not find buyers. So the expectation coming into the overnight session is it's likely to continue to push lower. It's likely to continue to push lower to see if it can find buyers below. And so that brings us to this next chart. So surprise, 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 we have this kind of triple distribution type of day when you consider the overnight session. And then we open up, we trade in the lower distribution. We put in a point of control right on top of the prior session's point of control of 43.75. And then we pop higher to 44.11. Remember, we're looking for the 44.20.22. This area here is the first key area of resistance, right? That was the high of Monday, and it was the low of Wednesday. So expected it I really expected it to consolidate, and I was willing to bet that it would move lower and start tackling lower prices, and it did not. It pushed higher, and it turned right over on that separatist leader comment in the news about telling residents to evacuate to Russia, those who are loyal to Russia, to evacuate to Russia from the Ukraine, which is a basically very clear sign that things are likely to escalate. Why do we care? Why do we care about a civil war in the Ukraine? We care, first, because we're human. We don't like the loss of human life. We don't like wars. A lot of victims come out of wars. A lot of money is made unethically during wars. But set that aside, economically, why do we care about the Ukraine? It's because it has knock-on effects to the rest of the European Union, and it's likely to be disruptive on a macro level somewhere. And so it's likely to escalate things. Bigger players come into it. You saw what happened with Syria. It becomes a proxy war between the West and Russia, which is never a good use of our capital and resources, and it's likely to spill over. So this is a risk that the market is assessing, but I believe that this is going to be short-lived. I believe that we are likely to see the SOC. We're likely to see the market back up at 44.04, where it started from, or 44.02, where it started from, which is also a low-volume node. Let me pull that in, which is also a low-volume node right here. So let me magnify that. You see this right here? This was a key over underline 2 days ago. This is where the light lavender over under zone was. And I'm expecting us to make a higher low and respond back to the SOC and come back into that. I think this is more of a risk aversion trade, where we are just stepping to the sidelines, pulling money out of European issues, And then as soon as clarity comes in, as soon as cooler minds prevail, we are likely to resume the auction and go back to the scene of the crime, the SOC. So that's what we're looking at the overall picture of what has been done. You can see really that we're in this balanced skew downwards. And I talked about this for quite a while in the last 2 weeks, that any rallies into the 4,600 are likely to fail. And they did. They went to the 86, the 45, 86 multiple times, 86, 82, and then they fell off. And then we had this retest of resistance, fell off some more. So there's an impulse. This is basically a zipper with a downward skew. We break down, come back in. That's what news looks like. That's what's expected this morning. Break down, come back in. And then we try to push higher. But what we have is these kind of zipper consolidations with an impulse, come back, retest, and continue. If you're patient and you trade in a bigger time frame, you'll notice that these are pretty good setups. The zippers provide a very, very clear risk control region, but you have to sit through a long time attentively to catch those trades, in my opinion. So that's where we stand. Looking at the week overall, coming back to our composite, all we've done is we've based, we've pushed up, we've tested the upper range of resistance up here. We've pushed up, we've consolidated for 2 weeks, and in this week, we are one time framing down on the weekly, we're one time framing down on the daily, and we are likely to pop around. The next week is likely to look like this, the week after that like that, the week after that like this, and so on and so forth until some clarity comes in, and that clarity is expected to come in. And with the Fed meeting, in March, the market is expected to get a little bit of a better idea of what things look like and how things will start to play out. I'm looking for the Fed meeting in March. So Bank of Canada. Where's the FOMC? Here it is. March 16th. March 16th is the time we'll find out how these things are likely to play out. So I think that we're going to get several weeks of several boxes of just a jerky kind of balance. Be prepared for that. And then once the Fed comes in, once the ECB tells us what it wants to do as well, we are likely to make a move away from here, as we have really packed in a lot of volume. We're still between these two big regions, which we're about to test. We're about to test the lower distribution of this region here, the 43, and we're very, very close. But overall, I'm expecting it to just bounce, come back up, and consolidate in the middle as a big picture on a swing type basis. Put on a butterfly trade in the futures with this stuff that's going on. So that's what that looks like. I want to remind everyone about yesterday's webinar. I put a fair amount of time into it. I hope a lot of you attended here. But the recording is up. You can go find it at go2ct.pro/trading-volatility. I really go over, I kind of pull the curtain back a little bit and provide a look at how I'm statistically organizing the data in the market, and how I'm dealing with volatility, and provide some specific recommendations on how to statistically manage your risk reward ratios and things like that. So let's take a look at what's expected for today. I outlined some of what I'm expecting for today, but we'll draw it on here. You know what? I'm going to kill this background paint because it makes the chart look noisy. 1 second. Okay, so here's what we're looking at for today, and let's move on. So we've moved down on news. The SOC is right here, is right in this 4400, 4402. You'll notice this lavender color. This is the over underline. This is the magnet. This is the key resistance. This is the key support. That's the price map. That's the key price map that's going on right now. I'm expecting that we're opening right on top of the point of control here. We're opening in a pretty well-formed lower distribution now. We're opening in noise. I'm expecting us to push lower as we extend and continue this impulse down. I'm expecting us to push lower into the 43.50 handle, but I'm looking for this thing to get down to 43.43. This is the key high volume node in this region. This is the key balance in this region. You can see it right here. Test, consolidate. At some point, I'm looking for an impulse back up into yesterday's close, settle, the lower distribution, yesterday's point of control, and I'm looking for a response to the overnight point of control at 43.97 and a return, ultimately a return to the O2 area. Okay, that's this low volume node here. Let's get rid of these. Let's get rid of these, and you'll see it nice and clean. This is the low volume area. This is what's expected. So I'm looking for it to push to 43.43 and then start to walk back up. The issue is that it is Friday and we have this really big risk overhang with Russia and Ukraine. So we'll see. Open auction responds immediately to the overnight point of control, gets to 44.02 and makes a run and an attempt at this 20. So this is responsive buying. Look to get long, back off at the 20, consolidates at the 20, holds steady, and then sells off into the close, into the 43 to balance risk into the weekend. This is what we're looking at. That with the layering of OpEx for the month on equities, we may see a relatively volatile close. So there's a lot that can happen this weekend that could change the game for a lot of investors, especially in Europe, and we are likely to see that reaction into the close. Okay, it is Friday. Make sure that you're not staking more of your account than you need to. Really, on any given day, you should not be risking more than 5 to 8% of your account, especially in futures. So, you know, that should be about 4 stop outs, 4 full stop outs in a row with no wins. Once that's done, just back off, go start your weekend, come back, fight another day. You're clearly out of alignment. Staying in the market when you're out of alignment is just a recipe for donating more money to those who are in alignment. So make sure you stay focused, make sure you're prepared with your price map, and make sure you just respond when the market is in your region based on your price map. Some of the prices are shown here. Okay, do your homework, follow it, be prepared, and just execute when the time comes. No thought, just execute. Good luck.